The broadcast is now starting. All attendees are in listen-only mode.
Welcome traders, thank you for joining us here at Admiral Markets. I am just going to ask you quickly to check the sound because I have a feeling that the microphone settings maybe are not correct. So if you quickly test and say that everything is good. Okay, great. So welcome, good morning. Admiral Markets here. We're going to take a look at strategies, the focus of today's webinar. If you are new in here by any chance, please let me know because otherwise I will assume that you've joined a couple of times, and it's always useful for me to know if anyone is new so I can give a bit more details about what I do here and why and how. So, but first of all, before we take a look at charts and price and technical analysis and strategy, this disclaimer explaining that that Admiral Markets material here, this webinar is intended for a global audience. Please take into account that the info in this session may not be suitable for everyone. To get the corresponding info on charting conditions and other details, please visit admiralmarketsglobal.com and select your country of residence and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational and informational purposes only. By continuing watching this webinar, you agree with this disclaimer. So I thank you for your attention. Give me 1 minute because I realize there's a bit of echo, and I'll try to solve it like I did it yesterday. I think it was a bit better. So let me do that. Just takes a few seconds. Alrighty, I hope that's a bit better. I think so. It's just the fact that I closed all the windows and doors to actually keep sound out from other places, from street and stuff like that, you know, actually has the effect that you get an echo. So we might hear some background sound like traffic, but it's probably better than hearing the echo all the time. So it's actually funny because it was intended to keep sound out, but then the sound stays too much in. Well, anyhow, I'm getting finally the furniture tomorrow, so that should solve it. We're going to focus on one of these strategies, or maybe two if we have time. We're going to take a look at, for instance, moving averages, candlesticks, or Fibonacci, or the Tenkin. It's up to you. You can always choose, so let me know if you have any preference for one of these. Otherwise, I'll just choose one and go ahead with that. But by all means, your input is always more than welcome. All right, with that said, let me head over to the calendar here. Let's see, we have this morning, we have some lighter Euro news throughout the day, and we have New Zealand interest rate, which is the big focus of today. It's expected to stay the same. Something to keep an eye on. All right, with that behind us, let's take a look at our charts. I'll use the same template as we used yesterday, which is basically kind of a mix of pivot points and moving averages. So we can continue with that if you like. For instance, the strategy that I typically use for the moving average strategies the last few weeks is, for instance, the 21 EMA and the 89 EMA. And the advantage of that was, for instance, yesterday, of course, the euro-dollar break didn't go anywhere, unfortunately. That's one of the disadvantages of trading it a bit earlier in the day because these things tend to happen a bit on the earlier side of European and London session. So that was unfortunate. That can happen though. This break where you don't really get any follow through, and it was a retracement day, in fact, in retrospect. Now, when you look at one warning clue, one advantage of waiting a bit longer, especially early in the morning, is waiting for an hourly. As I said, the hourly two ways of tackling. One is waiting for the hourly, and if you waited for the hourly, you would have seen this wick and a doji with the pin bar kind of at the bottom. That is definitely not a good breakout candle. So, for instance, in this case, a retracement not necessarily expected, but already definitely something you want to be cautious of, especially because there's 1 hour divergence. The bearishness overall I don't think is necessarily out of the market. I do think that the whole structure is still bearish. What is going on though is definitely a bigger retracement. One of the things of waiting for the trend of the day, let me say it this way, is not getting caught in such a move. And when you get the 21 crossing the 89, which, let me put that on the chart, that's always a good indication of a potential trend change that happened here. And there was some pips to be made upon this smaller breakout after going through the magenta line there, right? The 21 already crossed the 89. It didn't go all too far though, but that would have been maybe one way of tackling some of the upside. Now the upside I was definitely not interested in because it was too much of a downtrend for my opinion, but theoretically if one wanted to trade part of the retracement. From a bigger point of view, it looks like we're retracing this impulsive leg a bit further now after a drop, and the 38.2 fib and the 130 psychological level at 130 would be the turning spot I would expect for more downside, down to 127.50, which is the minus 272 target. So from a moving average point of, from a pivot point of view, not only, there's actually a lot of confluence at 130. We have a 38.2 fib from a fib point of view. From a pivot point of view, we have a weekly pivot point and a daily R2. From a psychological point of view, we have 130. From a moving average point of view, we're heavily in a downtrend with no divergence on the 4-hour chart. So we're actually combining 3 or 4 strategies at the moment and making a confluence at that spot. So yesterday the downtrend didn't continue, but doesn't mean that today or tomorrow it couldn't at a bit higher retracement spot. We did have single divergence, but I don't think that is enough on the hourly. That's not enough for total trend reversal because the 4-hour and daily are well strong enough on the bearish AO side. From a 15 point of view, if we look at the Camarilla point of view, it looks like we're trying to break, and if we do get an H3 breakout, then the H4 I think would be another, that would be the target because that's where all the confluence is at. As you can see, probably the H5 is the extended target. I would not expect price to get to H5, but if it does, there's a confluence with the 50 fib, but I don't think it will get there. So intraday, maybe some upside, but I would expect rejection at that level as discussed. And we got a couple of options: trading it to the upside, small zone, possible shorter time frames needed, or trading it from the rejection zone, or waiting for confirmation at the rejection zone, or if you really want to be more patient, waiting for a break of the counter trend line. Those are a couple of options a trader can think of when looking at when you're looking at specifically the moving average strategy on the hourly chart. Let me use a different template case. And let me use this one here. Where is it? In that case, I like to use a band of 3 moving averages with a 321, for instance, and 89. And you can see we had a tremendous breakout trade earlier this week, or last week. Sorry, no, this week. No, last week. This is the hourly chart. If you like to swing trade with this principle, You could wait for price, for instance, to get back to moving averages and wait for price to get below it again. Thanks, Bob. Sorry about that. I don't think you missed anything before that, very importantly, though, so I'll keep going. The screen was frozen. So anytime, for instance, a break in here, 21 dips below the 34, that's one way of tackling it, or waiting for price to get back to the 21 and going below it. So this could have been a shorting potential. This could have been a shorting potential here and here and here. Basically, anytime the 21 and the 89 are aligned and price moves back to the 21 and dips below it again. Right? So 21, for instance, closing below the 21 band right here again led ultimately to this big fall. Of course, that was a news event triggered as well, so it depends on your own personal preference about that. Another short was earlier this week, or very late on Friday. I wouldn't recommend that. I would say earlier this week is more practical, right in here. And that was a good fall. And you can see within that scope, this was a bit on the later side because price had already moved away from the moving averages. Now we're moving back on the moving averages. So if you're trading the moving average strategy, what are we waiting for at the moment from a strategy point of view? We're not waiting for price to get up to 130, not from the moving average strategy point of view, not on the hourly. The 4-hour, we're actually in a situation where price has retraced back to the 21 EMA band. It's a bit different story. The 1 hour, we're waiting for price to close below the daily pivot point. We're waiting for an hourly close below the daily pivot point because price has retraced back to the 21 EMA band. That's what we would be waiting for. Why? Because at the moment the 21 EMA band is up. Although the 4-hour trend is down, the 21 band is up. So for a breakout to occur on the euro dollar, we need the price to break below, not necessarily the daily pivot point, that's by coincidence. More importantly, we need it to break below and close below the band, which is by coincidence at the daily pivot point, giving a nice support confluence. That's where price bounced off as well. All right, so depending on the strategy, a trader, I could be looking for an hourly candle close below the moving average band and the daily pivot point. For price to bounce off the weekly pivot point if trading a fib or pivot points. And that's about it, I guess. Yeah. From a 4-hour point of view, price has retraced back to the 21 EMA band. So here too, an opportunity to go short. If we see good bounce candles off of the band, like here and here and here. Well, this candle is a bit on the later side, as you can see. Obviously, the hourly was better because the 4-hour candle moved already a tremendous amount before it closed below the band. So it's a signal. It's a late signal, right, compared to an hourly candle or previous 4-hour candles here. Here, yeah, I would say I would rather wait personally because we did close with this candle below. But still, I'd rather probably wait for the break of the low of that candle, 129.22. From a daily perspective, price is far away from the band. We did touch the band here. We touched the band and closed below it here and here. The first one wasn't too good actually because price retraced against it pretty steeply, depending on the stop loss policy and management. That could have been a loss. The second ones were wins, obviously. That's how it looks like on the daily. Less opportunities, obviously, because we're looking at bigger scales. So this is what the euro dollar looks like. If you have any questions, let me know. Otherwise, let's take a look at the pound dollar. Pound. From a 15-minute point of view here, it is looking very much like a contracting kind of wedgie thingy pattern is the name that seems to also get a break, a bit of a break to the upside here. Not very precise trend line here, but okay. Seemingly getting a break to the upside as well. Yesterday was just a consolidation day. And price seems to be retracing as well at the moment. Now, what leg could we expect a retracement if we get a retracement? So we can use the fibs again, obviously, to judge that. This is a pretty strong fall, so what fib to use depends on the AO, for instance. One could fib this part, and you can see price stopped at a 23.6 fib. So the next fib potential is 38.2 right here. That's one way of fibbing it, by using the AO. The other one is by fibbing from retracement to target. That would require going through this entire downside. I don't think I'll skip that for now. From a pivot point of view, we got a weekly pivot all the way up at 78.6 fib. So I wouldn't expect it that far. We got a actually weekly support one. I guess that could be resistance plus a daily R2. That seems more in touch with what we could expect with price action. So any price action and pivot point, price action candlesticks at those pivot points and a fib, just like the euro dollar basically, looking like good resistance for downside. From a moving average point of view, here too we're above the 21 band, so here too looking for a break and close below on hourly, below the 21 band and the daily pivot point. Both the euro and the pound dollar almost looking identical from this lower time frame point of view. And here too, in the long run, when looking at the 4-hour and daily AOs, it's not much of a question whether downside will prevail, but more when and where and what spot. So, and how to catch it, and when to catch it, and how much to catch, and etc. So, one way of doing that is through waiting for price, by waiting for price to get to those fibs I mentioned, or the pivot points, or waiting for breakout here. A more aggressive fib could be this. I know it's not the exact 1-hour AO fib. It's maybe more of a 30-minute AO fib, awesome oscillator fib. But if you put a fib on this swing high, swing low, which is a bit tighter and closer to price, then the 50 fib, which is the H5, could be the turning spot here, or the 61.8. Anywhere we're at 162, 161.70. Best, I think, because price has multiple layers where it could stop, is to look for price action signals or wait for the breakout. There is some momentum to the upside here, and the hourly is not showing any signs of weaknesses yet, so I would still be cautious with downside. And maybe there is some upside, intraday upside trade possible to those levels. On the euro dollar, it seems a bit better set up than pound, because the pound is really literally, I think, almost getting too close. But it, let's see, it did break above this top here and the L3, H3, excuse me, right now. So this could be a hook back for the upside up to 167, 161.70 and 162. But it's not so appealing to me. Alrighty. Let's see if anyone wants the Warwick. The best is to send. If you could please send me an email quickly, just very short email, nothing fancy. Just please send H3 indicator, and I'll get that to you, okay? It's easier. Great. Otherwise, I have to interrupt the webinar, and it'll just take some time for me to copy it, etc. So let's see. Other pairs. Otherwise, I move on. But same, basically, I think same plan, same approach as Eurodollar. Yeah, the band here is 21 indeed, and the single EMA is 89. Let's see, Euro Pound, maybe, I think we discussed about it yesterday already, making kind of a double bottom here. When I have only two EMAs on it, we're looking at a 21 plus a 34, so they're closer to each other. They have kind of different purposes. The 21 and an 89 is more like a short and an intermediate trend, whereas the 21 and 34 act more like a momentum trap, like in a way, momentum trap in the sense that as the 21 exceeds the 34, because they're so close to each other, when the 21 accelerates away from the 34, there's momentum increase. When they get closer to each other, there's a momentum decrease and more correction or contraction. So it's more like a momentum gauge, so that one has an idea if momentum is accelerating or decelerating. So it has a bit of a different purpose. I don't want to put everything on it. That would mostly clutter the chart if you have too many. But it seems like a double bottom here at the moment, but we're not breaking the top as yet. There is some signals that the downtrend could be over, so I'm a bit cautious on the Euro Pound for the moment. The Aussie had, of course, a big day yesterday, big breakout candle here. Although 92 didn't break with yesterday's candle, today's price action is. We'd still like to see maybe today's candle, how that looks like at the end of the day. If it's a big pin bar or if it's something decently bearish, would be still interesting. If it's decently bearish, this consolidation zone could be toast, and we could be in for a big downside ride, just like, for instance, the euro and pound dollar, and dollar strength would be kicking in not only against the euro and pound and Kiwi, but also finally, and yen, by the way, but also finally against the Aussie. This consolidation zone on the Aussie lasted about 142 days. Big zone, big, wide in terms of days, tight in terms of pips, 250, roughly. Not as long as this zone. This took 9 months. This was 5 months. Still, a breakout could be very interesting because on the weekly chart we do have momentum to the downside in the past, and you know, from this point of view, this could have been a retracement for more downside easily. Importantly, we stayed below this top, so this could just be a lower high, and we're now posting a lower low. That's for sure, even if it becomes a wick. So it is looking pretty bearish. We broke already a while ago this trend line, but we didn't get the follow through. Looks like we're getting that right now. So targets to the downside are getting slowly but surely in vision, which means we can put back a fib like this and say, okay, price is has hit the 50 fib here. The target of that is the minus 272. We didn't reach it the first time around. We could reach it the second time. It's about at 84, just below 84, which is a decent 750 pips. It's not as big as the targets I could imagine on the pound or euro, but let's take a look at the other cross pairs in a second. First, let's finish this one. So today's candle will be important, but you can see quite a lot of space. 284, quite a lot of space to this bottom at 86.50. That's not all. Of course, it could also go lower. It could go to the minus 618, which is 77, or maybe even accelerate a bit further past the target and hit 81. It's just an estimate, obviously. So from the 4-hour point of view, we can see the break here of the odd. From a discretionary point of view, this odd USD is basically, yeah, it's in a breakout. What would be pleasant is a hook back, maybe to 92, 92.50 if we put a fib on the breakout. If we get it, that's the question, and when we get it, maybe it's more of a question, but obviously those would be interesting levels for a retracement back to broken support. We never know really if we get that or not. From a 4-hour perspective makes a little sense, but so this is the just general analysis. Let's now move into strategy point of view. Let's take a look at the hourly and see what could be lining up maybe for today. We have a daily pivot point as well, but halfway to 23 and the 38.2 fib. The other pivots are way higher. Those seem irrealistic at the moment. The weekly S2 could be something to keep an eye on. Not any specific pivot points here that I would want to consider. The fibs I already discussed, so let's take a look at the moving averages. Let me use a different template now. Alrighty, the band has a tremendous angle on the hourly. The 4-hour too is just dropping as a stone. You can see here the weekly was kind of snapped back to the 89 EMA. And looks like good momentum. So this is breakout terrain. Let me say it this way. Breakout terrain here earlier in Asian session, for instance, is a good one where the price, from a moving average point of view, we're looking for price to get back to the 21 band and break below it. So if you're waiting for that and you're using a 50-minute chart, right, a breakout occurred right in here with this candle, right? The other way to trade it is this moving average strategy is the 21 crossing the 89. If there's enough momentum though, like here, up in here. But you got to be careful with those breaks like that because sometimes the break doesn't have the momentum to steam forward, and you want to exit at that point. You want to keep a finger on the pulse that the momentum is there, because otherwise you might not get the follow through. So this was the first potential. After that we had one more here. That didn't go too far. Then we had one more here that didn't do well at all. It depends on the stop loss. If the stop loss was above here, it was okay. This one was better, obviously. And this one didn't go too far, but this one did. So that breakout was doing well. That was an Asian session trade, though. It's up a pretty decent amount of pips. And if you're not in it, then another potential is waiting for the L3 long. That happened a while ago, and just a few minutes ago there was this break of 91.55. I wouldn't be jumping in right now right here, but let's take a look at the hourly. I think that potential trade already happened, but a bit of retracement, maybe we can still get in at the same level. Let me take a look at the 4-hour chart. Probably at max could be 91.54. I would say this McKenty line. You never know. Obviously, difficult to say a max. The stop loss would have to be anyhow above. Let's see, above the daily pivot probably, or at least above these tops here, because it could retrace all the way back up, hit 91, 96, and fall down. So at this moment, I don't think it makes sense to chase it. Either you're in the trade on the break of this bottom here, or this placement of this trigger candle, for instance, here, right? The trigger, because of the fact that it closed below the trend line and closed below, specifically below the moving averages. But if you're not in those trades, I would personally wait and see what happens. No sense chasing it. Let's see if there's anything else. Kiwi is breaking lower as well. It had some rough up and down yesterday. put it to big downtrend. It's accelerating from the moving averages as well. So from a, this is one of those scenarios where it's different than the euro dollar and pound dollar. The Aussie and the Kiwi are not retracing back to fibs. They're not retracing back to pivot points. They actually already broke out of and below their moving averages. So this is an example of a breakout where you can trade to break below this level. If we put the moving averages on, 1 second. So this is more of an example of a trade that could have been traded not so long ago, actually. Right in here. But this is a break of a Camarilla level. The break of the moving average level happened earlier. As you can see, it happened here, it happened in the Asian session, and again here, these two spots. That's where price break posted a candle below it. This is a level of a break of the Camarilla. So it depends which strategy is used. If you're waiting for a break of the moving averages, the trade would have been earlier and higher. If you're waiting for a break of the L3 or a fractal near the L3, it would have been around either here, for instance, around here. So as price retraces back to that level, maybe back to this breakout zone, it could be worth looking for a short from there. Dollar yen bounced, let's see, it's also breaking actually to the upside. Let's take a look. Same scenario as the Aussie and New Zealand. We'll take a look at the euro odd. You see the euro odd and pound odd are retracing very, very aggressively. It's pretty funny on the euro odd. It's almost like a V-valley, which is a bit more aggressive to the upside than I definitely imagined it would be, especially because of the steep fall that we recently had here. So this is definitely a more aggressive upside than expected. Sometimes can happen with crosses, more so than with majors, I think. But so this, obviously the AO is very strong to the downside, but with such a steep upside aggression, upside impulse and momentum, I would be cautious on both ways for the moment until we get more information. The pound odd, I think, looks still a bit more bearish because it still has quite a bit of resistance above it and didn't, fully engulf this swing, this bearish swing here on the 4-hour chart here. This bearish swing. So to me, that looks more bearish as yet. Not to say that it's not moving up at the moment, but for instance, if price gets to the weekly R1 and daily R3 here, that could be a good level, considering the H4 as well, where we have bottoms here, to look for a price action at pivot points. So that would make sense for that strategy point of view. From a fib point of view, I would put the fib on this very last leg down, and we got confluence to 78 and 886 fib. And from a moving average point of view, actually we're in upside. From a moving average point of view, although from a structural technical analysis point of view, it's bearish. From a pivot point and fib point of view, I would look for rejection higher. From a moving average point of view, we actually already have some momentum to the upside. Looking at the 1 hour, 4 hours still bearish, 1 hour is bullish though, so there's a bit of a mixture between those time frames. And from a 1 hour point of view, there was actually kind of a swing break trade here upon the break of these levels, although you had a weekly pivot point right in front of you, so that might not have been a good idea. But from a moving average point of view, that would have been a swing trade potential to the upside. So primary things from moving average point of view I look at is 21 and 89, for instance, sometimes 34 and 144, 21 and 89, either price getting back to the 21 or 21 changing trend. from a 15 point of view in Camarilla, I know we're mixing a lot of strategies. It was not actually my plan to do it like that, but it started with the euro dollar like that, and continued that way. We can see that from a Camarilla point of view, one way of trading Camarilla could have been waiting for actually just about the same breakout as the moving averages here. That was another breakout, although obviously at a worse price than the previous one. The H5 is 76.80, but I think it could go a bit further than that, in fact. All right, so maybe, sorry if that's confusing to mix so many strategies together, but the other option is looking at the same strategy across all the pairs and then looking again at all the pairs with a different strategy. I thought that could be boring as well, or I thought this could be a bit different, so I hope it's not too confusing. Basically, we're looking at moving averages. As you noticed, we're using fibs, where you're looking at pivot points, and looking at Camarilla. We're not looking at Tenkin, as you probably noticed. So these four things, main focus at the moment. Wait for break and retracement. The Kiwi, Aussie, dollar yen have already broken out, so all that probably is remaining on them is either waiting for the pullback, in fact, and continue, because the breakout has already happened. And price action and fibs don't make sense when price is breaking out. Or, well, we could put a fib on the breakout, but you know what I mean. Oh, sorry, I had a question actually about New Zealand yen. Sorry, Judy. Let's take a look at New Zealand yen. If you have questions, by the way, by all means, please feel free to ask me, and we'll take a look at that. So, New Zealand yen, let's see, daily chart. Broke above this blue resistance line with a daily candle above it. I had a kind of in-between day yesterday with a bit of a wick, bearish day, in fact, but we did have a breakout. Obviously, from a daily point of view, you see it's kind of like a retracement kind of thing. Although it was an ascending wedge here, we got to be careful about the breakout still. It is trying to break to the upside. It's still on the early side, though. I think that looking at the fact that we have engulfing here and we're hooking back at the broken support, could be an interesting long indeed. It's obviously quite choppy, but we are at the daily pivot point. We're kind of like bouncing at the daily pivot point. If the stop loss is below the weekly at very minimum, if not below the daily bottom, it should be okay. The higher one is a bit more aggressive because you're using yesterday's low. The wider one is a bit more conservative, I would say. But those two are the options. I wouldn't put anything higher than that at the moment. This could be a decent bouncing spot indeed. This could be a bouncing spot. The other way of trading it is waiting for a break above here, above H3 for a breakout to the upside. That's another way of doing it. They both have advantages and disadvantages. The obvious advantage of taking it here is better price. The advantage of taking it higher is more confirmation. But looks like a bouncing spot if you look just at support and resistance logic, with the top here, with the moving averages engulfing 4-hour price action candles. So yes, it looks good to me. It looks like a decent bounce. We can take a look at a different perspective on the New Zealand yen. 50-minute chart, moving averages are a bit intertwined. As you can see, on a 50-minute chart, there's quite a lot of consolidation. On hourly chart, you can see that although we had a pretty strong AO reading here, and AO is back to the zero line, the confirmation of that would really be a close of the hourly candle above the EMA band or a break above the fractal roughly here. So, from a breakout, what moving average point of view, you're looking more for a breakout above these magenta resistances. From a bounce point of view, this could be a bouncing spot indeed. Yep, agree. Let's take a look at pound CAD. Sorry about that. I was right next door. Sorry. Here's the pound CAD. Well, like all pounds, we do see a pretty strong momentum to the downside, but we also see a retracement going on to the upside at the moment. So pivot points, very valid, looking for a rejection to the downside again. Definitely, from that point of view, looking for a move up to the daily R3 or weekly pivot point for a short, I think makes sense. From a moving average point of view, from a 1 hour moving average point of view, we'll be waiting for instance, a break below this moving average, this trend line and daily pivot point. Same like the pound dollar, looking for a break below. So either a bounce from higher or a break lower, making sense within this downtrend in my opinion. Now it could easily retrace higher. In that case, if we put a fib on the very first retracement here, you can see price went up to the minus 272 target. The next could be the minus 618 target. So from a fib point of view, I think a short around the monthly S1 looking good. So we got some confluence between fibs and pivot points. We have a minus 618 right at the monthly S1 and the weekly pivot point area. So rejection roughly in here, breakout below here. In my humble opinion, that would be the battle plan for tackling the pound CAD using these principles. The red arrow and the red circle at resistance. Here too, pound CAD, when currencies start to trend, moving average strategy is very nice because obviously you see a lot of pullback and break follow through here, not that much, but a bit. Here a lot, here a bit. You want to take a look at the AO, how much you can expect of the downside. It's very good to keep an eye on, the potential for downside and how strong price is acting with its price action, right? How much momentum there is. Obviously here, this was a good switch of trends. This was a very good fall. That was a gap, but okay. Alrighty. Let me see. Which pairs are we interested in? Let me take a look. EuroCAD. EuroCAD is very similar to the pound CAD, so I don't think it really makes sense to review that one. I think we more or less covered quite a lot of ground pretty fast today. Does anyone have a particular pair in mind or any questions you want to look at? The Aussie is, by the way, not only losing ground against the dollar and the pound and euro, but it's really losing ground against almost everything, against New Zealand, against the Swissy, against the CAD. So it's really across the board at the moment. It's interesting. I still think that pound dollar and euro dollar weakness will be stronger than the odd USD weakness because of the fact that pound odd is moving up towards resistance, but that remains to be seen, obviously, still. The fact that the euro is moving that much higher is a bit of a caution, although we still are below this top. But yeah, the odd weakness is really strong. Against New Zealand too, it had a good run up, but now it's really falling very, very impulsively. From a moving average point of view on the hourly, 1 second. All right, sorry. Let's see. Took a bit longer. There we go. 1 hour point of view, you see we had a very nice breakout candle right in here. So obviously we don't have an example right now because price is away from the moving averages, right? So when price is away from the moving averages, it's accelerating and it's not a breakout anymore. It's not on this chart. It's in a momentum. It's in a fall. It's falling as we speak. The breakout from a moving average point of view, oh, sorry about that, is this right here. When price is below both moving averages and then moves back to the band and breaks below it. You can see that was a very nice fall. That's an example. Or to the upside, we had an example here. Price is above moving averages and price closes above it. Got a good rise. Or here. Price closes above it after moving back and got a bit of a rise. As I said, you have to keep an eye on the AO for some estimation of how far it can go. When you already made a decent move up like this, this could sometimes be shorter lived. And one way of having a bit of an estimation is performance using is by, for example, I'm mixing up Dutch here, is by using a fib. Now, which fib to use? Probably have to use a lower time frame actually to establish the best fib. But roughly, if you probably use a 50-minute fib, it would have been probably this fib. I estimate roughly, not 100% sure. If it is indeed so, we can take a look. Why not? If it is indeed so, well, it's actually a bit deeper here to here. Okay, let's go back. In that case, you can see the target is the minus 618 target. So if a breakout candle is here, one of the targets you really want to think about is the minus 618. Now, of course, price is away from the moving averages, so we need other time frames to look at because we want to see price back to the moving averages. So when you see prices accelerating away from the moving averages like this, it's not a breakout for that particular scenario. So you can look at other pairs, the 4-hour, other pairs and currency, but specifically what I want to say, you can look at other time frames. And the 50-minute chart, for instance, would give maybe an opportunity within that fall. On the 50-minute chart, you see there was not only one breakout up in here, but there have been a lot more. Let's put a line right at that 1-hour breakout. Obviously, you have to be careful that with every breakout lower and lower, those 50-minute breakouts can act well, they can do well, but at some point, you're going to get the unavoidable retracement on the hourly. And if you then take the last breakout on the 15, that could be one loss. That is always possible, no matter how you trade. But that's what happens with the market. You kind of have this impulse of the hourly. We had a good breakout here. That breakout on the hourly goes well, and you got a 50-minute more opportunities to capitalize on that impulse until the point that you get the retracement on the hourly. And then if you then use the 50-minute chart, you're going to get whacked to the downside because the momentum is back to the upside on a 15. Here was a breakout on the hourly, right? We looked at it. There's also a breakout on the 15. So probably the 15 breakout happened a bit earlier than the hourly breakout, but both time frames had a breakout right there. So what happened was a breakout there, you got another breakout here, you got another breakout here. But how about this breakout? Is that as reliable as the previous three signals? Is that the same quality as the previous three breakouts? The 1 hour price is pretty far from the moving average. So obviously the answer is no. It's not the same quality because we already had previous three touches. Price already moved back 3 times. This is the 4th time back to the 21 EMA band on the 50-minute chart. The hourly price is far from the hour 21 band. So what could happen in this case? There is a potential the price can move back, make a retracement on the hourly chart. How would that look like on the 15? Price would do this, wouldn't it? And in fact, the momentum would already probably switch to the upside for some time. So obviously taking a move there has less expectations. Just like, for example, taking a short up in here when we already had a pretty strong down move prior to that, we also got a bit of retracement. Actually, that retracement didn't go too far. But just to prove a point that you could have tons of, when you have a strong angled band like this, you could have tons of trades where price has gone back to a band on the lower time frame and continued. But eventually you run the risk of bumping into something of a bigger retracement. Right? So on the 4-hour chart, for instance, here, a different perspective, 4-hour chart, for instance, if price goes back to moving averages and breaks above it, like it did in these examples here, like these green dots, they all qualify, in fact. You know, 2, 4, you got about 7 here, but if you zoom into the hourly chart, on this up run on the Odd New Zealand, there could be 28. Right? But not all of them are going to be great because at some point, of course, you get the bigger retracement like we're getting right now. So let's take a look at that hourly chart from here to here. All right, and you see on this up run, we didn't have one opportunity, but we had 1, 2, as I said, 3, 4. 4 of them. Obviously, you see that the quality of the last ones is decreasing. The first one was great. The second one, okay, pretty good. Third, okay-ish. Fourth is a loss, probably, because that's when it starts to retrace. And this may be even a bigger retrace than we expected. So we got I mean, there are tons of pairs left potentially to look at. It all depends on us, but I guess we looked at the majors, most of them in the meantime, except I think the Euro-Yen we didn't look at. Euro-Yen is quite a funky price action. It has everything to do with the yen weakening against the dollar, but the euro also weakening against the dollar. So you're getting a bit of a stalemate here where prices have this bouncing back and forth between kind of the, levels where price just oscillating here, making a lot of noise, a lot of spikes up and down. And that's everything because of the fact that it's really the dollar that's dominating both of them, and at times the euro comes back and at times the yen retakes it. So you're seeing this kind of funky looking consolidation zone because of that, probably. And that's not easy to trade. So I don't really have any specific recommendation for euro yen at the moment. I mean, maybe if it dips back towards the daily or monthly pivot point, it could be a bouncing spot, but it's highly spiky, and that's even the pivot points could be pretty difficult to trade with. Anyhow, if you took longs, I would be looking for take profits below this here, which is looking like a resistance. Well, I guess that's mostly what I wanted to discuss with you. I hope you enjoyed it. I hope you'll learn some things. If you have any questions, still let me know. Otherwise, I will wrap it up for today, unless you have a specific pair in mind. Let me, in the meantime, show you the webinar schedule. We got tonight, then is going to talk about scams. Tomorrow we're going to take a look at moving average trading, and tomorrow as well, classical technical analysis. So enjoy. We're looking forward to that. I think it will be a lot of fun, classical technical analysis. And Sunday, premium webinar for real account holders, I think. It is, let's see, Claudio, about the euro dollar. Euro dollar, basically the same like the pound dollar. Downtrend, massive momentum to the downside, massive AO bearish readings. However, price is making retracement, and if it retraces deep enough, like the weekly pivot points or daily R2, I think that would be great to look for candlestick price action signals at those levels. From a fib point of view, we got some confluence there too, because it's the 38-point fib. From a psychological point of view, we have the 130 level as well. So if it gets high enough, I think that could be interesting. The other, of course, scenario is that it doesn't get that high. What to do then? I think a close of an hourly candle, basically below the moving averages, the 21 band on the hourly, could be a decent breakout candle if it closes also below the daily pivot point for downside. So either retracement higher for a resistance, or price breaking lower, as I think the primary options what I'm thinking of at the moment. If one is a bit more adventurous, maybe even an upside retracement trade could up to the resistance is possible, but that has its risk. I think it's not so interesting though, but it's possible. It's kind of making like this bull flag here after some momentum to the upside. So if price does retrace higher, there could be on a lower time frame that breakout to the upside. So market structure is still bearish. It's just have to monitor and measure how far that retracement can go. I think 130 would be, or just below 130-ish would be an ideal confluence for more downside again. And if it doesn't get there, then have to keep an eye on the breakout. So let's see. Yeah, this breakout, for instance, it could be when price does push through this support, could be one way of trading it. However, if you want a bit more confluence, extra confluence, an hourly candle close below it could be good, and a close not too far from the low. Like this candle, for instance, was a wick. That's something you want to avoid here as well. Alrighty, folks. Thanks so much for joining. Hope to see you in one of the webinars tonight or tomorrow. And have great trading, happy trading as well. Many green pips, as Tarantula says. And see you soon.